Hi, thanks for joining me again. You can see in front of you the daily parent index chart for the Australian Stock Exchange. This is the XJO or ASX 200, the 200 largest stocks on the Australian Stock Exchange. And inset on the left-hand side is a 1 hour chart. It's showing the period here to the left. It's showing where this pullback took place. And that's what I want to talk about today, this pullback, what's happening, why it's happening, and how you might be able to benefit from it yourself. Pullbacks are fairly common on the Australian Stock Exchange, as they are in many stock exchanges. The Australian market had been looking fairly positive for some time without actually breaking out, and more recently price made an attempt to break out, but at the same time there was a bit of supply being drawn out in overseas markets, the US market in particular, and that caused the Australian market to stall a little and not complete the breakout. You can see that price pushed higher and then came back on fairly good volume, but that was absorption more than likely because price didn't get anywhere near pushing below the previous bar's low, so the market was absorbing supply here. The next day appears like it was on no demand, but there's no weakness in the background, and that was the Monday after the weekend, with the Tuesday being a public holiday, and many in the market made a long weekend. But at that time, the US market was starting to draw out supply, and you can see that reflected in this bar here. Price pulled back. It still remained within the range of this bar on higher volume where the market appeared like it was going to break out. You can see the volume was increased, and there may have been some setup going on here, but then the next day price sliced lower on an increase in volume and the pullback was on. Now some might say, if the market was bullish, why did the market pull back? It's a reasonable question, but for two reasons. The first being, it could be extremely expensive if professionals in the market attempted to stand up in the face of a market that was selling off due to overseas interests, and it's unknown what would happen subsequently. But more likely is these pullbacks are a regular feature in the ASX and many markets around the world, and they can be highly profitable for the larger players in the market. And they look forward to these events. They encourage these events and they take part in them eagerly. Now you can see price slice lower on an increase in volume down here and easily broke through the lows of that up bar we'd been looking at. Now as price moves down, I expect the larger players are actively encouraging the market to go down further than it may have otherwise. They would be selling some positions on the constituent stocks in the ASX 200 and even opening some short positions against those stocks. But they're temporary. They're just used to amplify the amount of pullback that would happen in the market, to push prices lower, to make it more beneficial when they start buying them again in the future. Remember, this market has a relatively positive sentiment. There's going to be profits to be made more than likely, and this is just a small event, and the markup will probably resume again later. And at the lows here, the market's adjacent to the previous lows in the trading range, and some demand started to appear. And this was the signal for the market to begin covering shorts that helped them get the price down this low. and start some tentative and perhaps speculative buying. And this amount of the bar closing off the recent low shows where demand came in. Supply has probably been completely bought above that, and there's probably some form of supply vacuum in this part of the bar above the close. And then the next day continued higher initially. We can see to the left I've got the 1 hour chart, and that's this part. In the first hour of the next day, price pushed higher and then came back to the lows here and closed just off those lows on an increase in volume. Now, if this was all selling pressure, similar to the day prior, before the tentative and speculative buying came in off the lows, then this next bar would likely have continued lower and closed down here, something along those lines. It would have been a similar bar to this one, but it didn't do that. Instead, the bar closed within the range of the previous bar after testing the lows just a little, just a touch below the low of the previous bar, closing back above it. There was buying in this bar, there was absorption. Sure, the market, over this side, the market pushed the price higher initially. This was unlikely to be professionals in the market doing much of this. They would prefer the price to be lower at the moment so they can buy at a decent price. But after this bar had completed and the downside was no longer being favoured and buying had come in, remembering the previous close was here, previous bar's close was here, because there was buying off the lows and effectively a supply vacuum in this part of the bar, price was able to move up higher quite quickly. This was the next day. So overseas markets had traded, and some in the markets probably started to understand what was going on. The pullback was not going to continue for a long period of time, and they came in and bought at the open, pushed the price up. This buying was likely not supported, and the market was allowed to then drift lower over 1, 2, 3 hours before to close low and back down near the lows of the previous bar. You can see that here. Now the next day, price traded both below and above the previous close. Now if we look over on the 1 hour chart, you can see that there was actually a pretty clear shakeout. 2 bar shakeout here. Price got rammed down in the first hour and sprang back in the second hour, and during the third hour, price closed above the initial down bar's high here. That was the indication that price may begin pushing higher. Now, let's just clear that. When the market pushed price right down to the lows, back over here again, down to the lows in the first hour of the third day of this pullback, and remembering at this point, news would probably be bad. There would be a bad sentiment being put over all media and internet where possible to encourage people to sell or be at least concerned that the market was in trouble. It would give a bad gut feel to those in the market. And price pushed lower in the first hour of the third day, and from there, it's what I call a buy the offer situation took place. When the market was pushed down, some had made the decision they would like to get out of the market, but they didn't want to take the very low prices now on offer. So they place a sell back above the lows, hoping that the market will bounce up and they'll get slightly more than they would have otherwise if they sold. The professionals in the market know this will happen. They've pushed the price down in the first hour and waited as long as they can to allow the offer to be rebuilt, and then quickly, over 4 hours, they bought the complete offer back for the close to remain here for the day. This was probably a buy the offer situation over the next 4 hours, where the market accumulated and absorbed a large amount of stock. Now, if I clear that again, if you look at the daily chart, you can see here's one of these little junctures that I often mention. Just here, you can see price pushed down but remained within the lows of this up bar, which was on higher volume down here. This is the significant bar. In my opinion, when price gets back above this level, all the increased supply that has been drawn out while price traded below this level is all left behind. All that weakness is left behind. It's then below the current price, and price is then free to continue higher. So this is the important level that I continue to watch. This is where price broke down from, with a wide spread on increased volume. And this little juncture between the previous bar's close and the widespread down bar on increased volume is the level I watch to say that there's likely to be freedom in the market to move higher once that's exceeded. So we've seen price pull back, we've seen some absorption, and then we've seen a shakeout and a buy the offer situation. Price then moves up to this important level that I've marked, and price moved up there in a similar fashion to the previous bar, in a buy the offer sort of style. You look down here, you can see that price, it accelerated higher here and then steadily moved up to the close of the day. So over the day, price pushed higher, it tested, it pushed higher, it tested, it wasn't a very good test, it was a secondary test, it pushed higher again, and then the auction was a tiny little close below the previous close. This was another buying day, an absorption day, and price was now up at this important level, and the next day price pushed through quite easily on an increase in volume. It did close off the highs, but that was in respect to this previous trading to the left. Price then pulled back. There wasn't a great deal of selling pressure. You can see volume reduced and then bounced back on the Friday on a similar amount of volume, which says that there wasn't very much selling pressure in the market, and modest demand allowed price to push right up and close positively. Overall, this is quite a bullish setup. It's quite positive. And stock that was bought at these levels will now be sold, most likely, at much higher levels. And this will be a profitable exercise. And that's why we pull back regularly, sometimes unnecessarily, some would say, in the market. It's because it's a profitable exercise and probably an enjoyable event for some of the professional players. They look forward to this happening. They get a chance to get in there, push the market down, buy at bargain prices compared to where the price was previously, stock up with good constituent stocks in the ASX, and then quickly price goes back to where it was before, breaks out just like it was going to do originally, and is set to push higher. Okay, thanks for joining me again today. Hope that was interesting. See ya.